Hi, everybody. This is a re-recording of the webinar that we gave earlier today. I'm Ernie Harvey, president of AirInsight Group. I'm joined by Addison Sharland, my partner, and we'd like to talk today about the future production forecast and some interesting facts about pilots. So we'll start here with the production rates. Production rates are going to fall significantly as a result of the COVID crisis. As the saying goes, this time it's different, and we'll talk about that in more detail. I may have the next slide. As we look ahead to where things are, we've produced a Delphi method consensus forecast based on interviews with multiple sources. We've probably talked with more than 20 people in the industry this week about where they think things are going and when things will return to, quote, normal or back to 2019 levels. There's a wide variety of opinions there, but they coalesce around a couple of findings. One is rebuilding product levels will be neither quick nor easy, production levels. Suppliers will be hit hard as volumes fall by more than a third initially. Fewer flight hours will mean aftermarket revenues will be down as well, so that's a double whammy. There'll be a 3 to 4 year period of belt tightening before things get really, quote, back to normal. And in the interim, the mix of aircraft is likely to begin to change as we retire some of the older models in the fleet. Next week, Michelle Merliso from our AirInsight research division will present his detailed bottom-up forecast for the industry. And this is a forecast for the entire industry, including commercial, regional, business jets, and defense. So we'll look forward to Michelle's presentation next Tuesday. But for now, we've got our look at the industry from our Delphi consensus. Next slide. Many of you have seen this slide from the Airbus Global Market Forecast, where it shows the resilience of air traffic through previous crises. We've had the oil crisis, the Gulf crisis, the Asian crisis, 9/11, SARS, and the 2008 financial crisis. And each has been a little bit of a blip up and down as the crisis comes. It usually goes flat to slightly down and then it resumes its growth course again. May I have the next slide? This time, things are different. And they're different because the drop-off is going to be substantial. As we look at this year, we're going to lose about between a quarter and a third of airline traffic. And IATA's predicting a bloodbath for airlines worldwide. People just aren't traveling as routes are shut and countries are shut from one from another. So the drop in traffic is tremendous. And the return, well, it'll be a pretty positive return coming up. We'll see some growth and then a resumption of a return to normalcy. But it's going to take a while for us to get back to 2019 levels, probably 3 to 4 years. May I have the next slide? A couple of reasons for that. One is that business travel is going to be impacted and impacted pretty severely by two factors. One is the economy. When the economy isn't robust, business people don't travel as much. And the second is the internet is going to replace some business travel. People are now getting used to meetings like this on Zoom and find that they can do business and may not have to make that trip or make one fewer trip out of the trips they make annually. If you make 6 trips, maybe make 5. So we're going to see a drop in business traffic from a structural standpoint, and that'll stay with us for quite a while. And we think that's going to be about 7% when it ends up, but starting at about 9% next year. The economic factor we're showing is 9% next year, and that'll mean that business traffic for 2021 will probably be about 82% of where it was in 2009. So a pretty severe drop. And it gets better over the years, but we get back to 93% of normality in 2024. The important factor here is that while business traffic is 35% of airline traffic, it represents about 50% of airline revenues because the business travelers pay the business class fares and the full fare economies when they're booking at the last minute. Next slide, please. Leisure traffic is going to rebound with the economy, and the economy, unfortunately, is going to be in the tank for the rest of this year and for a good part of 2021 and 2022. We see a 27% loss in leisure flights next year because of the economics. Leisure traffic is related to GDP, and the GDP is simply not going to be there. People are unemployed. Some small business owners are going to have to shutter their businesses. The last thing they're going to want to do is to get on an airplane. And most of us who look at our retirement portfolios and say, oops, we've got to work a few more years, also don't want to frivolously spend, but save for the future. So there's a lot of belt tightening coming up, and we don't see leisure traffic rebounding well either. Next slide, please. So what this means is is lower traffic, lower volume for the airlines, and lower volume for the aircraft manufacturers. Airbus has already announced its production cuts for next year, the A320neos from 60 to 40, the A350 from 10 to 6, the 330neo 5 to 2. The only bright spot is the A220, which is currently averaging 5 to 6 a month, will grow to 8 to 10. It was planning to grow to 10 to 12, but it's still a nice increase for that airplane, which has versatility. The A220 and A321s will be the beneficiaries of the changing environment because both are a little bit unique. They're smaller than the airplanes that they'll replace, but they have equal range and better aircraft mile and seat mile economics. So the A220 has seat mile economics comparable to a larger A320 or 737, but carries fewer passengers, and it's less risk for an airline to put those on certain routes. The A321 is smaller than the 767 or A330, and can replace those airplanes on transatlantic routes because of its unique range capability. So we think those two airplanes are going to be winners. We have the next slide. Over on the other side, Boeing has also announced cuts, but the return of the MAX is complicating things quite a bit. There are 400 MAX aircraft that are already built but haven't been delivered. How do they get delivered, and how does that impact the production of new MAX airplanes? Because that's really where the supply chain comes in and looks at it, is how many new airplanes are you starting up and building? And for that, the MAX, which was planned for 60 a month initially by this point, will now have 12 to 16 new builds as Boeing struggles to deliver all of the 400 airplanes that are being built over the next year. If they deliver one airplane a day, and that's a lot of deliveries, it would take them basically 20 months to deliver those aircraft, so a year and 3 quarters. So it looks like the MAXes that are on the ground now at the parking lots will stay there, the last ones, until early 2022. The 787 production rate is dropped from 14 to 10, and it may drop further to 8 if demand doesn't turn around. The 777X, a large aircraft, is just coming into the market at the wrong time when demand for large aircraft has fallen off a cliff. This is an important airplane for a lot of the Middle Eastern carriers who have the bulk of the orders, but we see a low production rate starting out for the aircraft. You'll notice we have question marks for the E2 190 and 195, and we'll talk a little bit about the Embraer merger later. But there are question marks as to how and when that happens, or if it indeed happens right now, and that's a whole other issue that we'll talk about in a few minutes. May I have the next slide, please? The completed MAX deliveries are a real problem. Airlines don't want the airplanes right now. That's good that the MAX is not back in service yet, because airlines wouldn't want them anyway. But it's bad that Boeing has spent all that money and is holding these airplanes at inventory cost without achieving any return. When will these come back? Well, the MAXs have been delayed again in recertification. There's two more software issues were identified last week, and it appears that worst case scenario of June is now not going to be met as they're back to the drawing board for software. Part of the problems with that airplane relate to the old 286 processor on board and efficiently reprogramming that with all the new capabilities. It's a little bit weak for the job that it has. But nonetheless, Boeing should get that software worked out, and we're hoping that they get a September return authorization to return to service, and the airplanes start to fly again by January of 2021. Next, please. The Embraer merger is another question. The E2 is an excellent aircraft. It's powered by the GTF engine. It's a modern design. It's comfortable. It's well liked by passengers. The E1s are very popular, and the E2s are very popular as well with passengers. But it's had poor sales pre-merger. And one of the reasons for that is airlines look for combined deals as they work with the manufacturers. So if I'm buying a 787 and I'd like to buy a couple of E2s with that, generally there'd be a combined deal. But that can't happen now that Embraer and Boeing have not yet merged. The EU has held up the merger for the longest time. They've been, out of 11 regulatory authorities that needed to approve it, the EU is the only one who's not approved it. And the finish of their review is not due until June 23. And that was a pre-COVID-19 date, so that may be later than that by the time they finish their review. It appears that politics might have reared its ugly head here as Donald Trump put in tariffs against European airplanes, and the Europeans may be holding up this merger as a tit-for-tat move politically. Boeing is in a situation now where they're obligated to pay $4 billion for a portion of a company that stock price has fallen dramatically, and the whole company is worth now less than $2 billion. So why would you pay double what the market value of the company is and go through with a transaction that's obviously no longer in relationship to the price of the assets? Further, if Boeing gets a federal bailout, and they've been looking for that bailout, would the taxpayers feel good about seeing $4 billion of the bailout go directly to Brazil to pay for this merger? So there's some real questions as to whether this thing will actually ever happen, or whether the Europeans, by delaying and getting us into the crisis, have actually killed the potential for the Embraer merger. Next slide, please. So here are our consensus projected rates based on what we've heard from people in the industry. For Airbus, the A320 will continue to grow in production from 8 to 9 to 12, and potentially 14 up in 2024. The A320neo will slowly resume its way back to the 60 level that it had, 40, 48, 54, and 60 over the next 4 years. The A350XWB back up to about 8 a month and steady thereon. It's been a good selling airplane, and it's actually outsold the 787 since it's been introduced. The A330neo has been a slow seller. And while it's a good airplane, it suffers from the fact that it's a great replacement for existing A330s, but the average A330 is only about 10 years old. So there aren't enough replacements yet for it to catch on in the market. So we see a slow start at 2, 2, 3, and 3. For Boeing, the E2 190 and 195, we've got question marks because we don't know if that's going to happen. For the existing MAX, we think they'll deliver 20 a month in 2021 and 13 a month in 2022 as they try to get rid of the 400 airplanes that are sitting on the ramp. New MAXes will grow from a slow base, but while they're getting rid of those existing aircraft, they can't build too many more, especially in a market when no one wants to take aircraft. So we see only 16 a month, 24 a month, going then to 42 and 48 as the industry begins to rebound. The 787 will stay around 9 to 10 a month. That's a solid airplane. It's selling well. And the 777X suffers from the same fate as the A330neo. Most of the 777-300ERs that it would replace are relatively new and under 10 years old as well. So that's the, in a nutshell, our look forward at production rates on the commercial aircraft side. Edison, I'll turn it over to you for some thoughts on the pilot shortage.
Thank you, Ernie. Hi, everybody. What I would like to share with you is an idea that we've been looking at, given the fact that we started this year in January with a pilot shortage. And here we are, 8 to 10 weeks later, it may be that we now have excess pilots. Let me explain. In the top table, at the right-hand side, you'll see in the gray boxes, the total airplanes, the number of pilots, and the ratio of pilots per airplane. So the cells to the left, starting with the airline name, is the number of airplanes that fit into that category of age. So basically 0 to 5 years, 5 to 10, and so on. Then we have three scenarios: red, orange, and yellow. The red ones we're highly confident are going on a one-way ticket to the desert and going to be recycled. Now, if you look at that, for example, Delta has 150 airplanes at that age group. Based on the ratio of pilots, that's over 2,000 pilots they don't need. The orange group is another several airplanes that we are also highly confident are likely to be retired. And in the table below, you can see how many pilots are in excess. In the yellow, we feel that there are several airplanes in this group that are also going to be retired. All told, you can see literally these three airlines have thousands of pilots for airplanes that won't be flying. So we go from this pilot shortage to pilot surplus in a matter of 12 weeks. That's pretty shocking. But there's another aspect about this, and particularly if in the supply chain and you're wondering how this impacts you. Take a look at this. Here we see from the FAA, this is the 2018 data, by the way. That's the most recent data. We see a curve that shows the average age of pilots with a air transport license. And if you're going to retire pilots, typically what's going to happen is you would think that the older pilots would be offered early retirement or go on long vacations, basically ease them out of the industry. The difficulty is that they represent 53% of the total pilots in the United States. And you don't want to get rid of all of them because a lot of them are check pilots, and you need the check pilots to help the others get back in the groove when the industry comes back to its potential. And that might be, let's say, 3 to 5 years. Now, if we go 3 to 5 years on this curve, and we've now got rid of much of these people, let's say not all 53%, but a good proportion of them, and now we are 3 years down the road, and we now have air traffic coming back to, let's say, 2019 levels. This is where you in the supply chain suddenly have to get very interested. What happens when you get to 2019 traffic levels, but you don't have the crews to move them? Well, what you're going to see is the airlines are now going to have to deploy larger airplanes. 74% of the fleet as we speak today consists of 737s and 320s. That's the bulk of the size. Going forward, though, we're going to be looking at 737-900s, the bigger one, the MAX 9, the MAX 10, the Airbus 321, and of course, by that time, all the 757s are going to be out of service. As it is, they're not flying now, but they're not coming back. So now we have a situation where if you're in the airline business and you're asking for federal government support, financial support, and you're furloughing pilots and you're laying off employees and you're basically shutting your business down, it doesn't look like a good idea to go and order airplanes. And by the way, given how long it takes to get an airplane, 3 years, if all things were being equal, you'd actually be ordering bigger airplanes now, but you can't because the optics are all upside down. So we don't know how this is going to play out, but what we want to do is give you a look at a scenario of one aspect, just the pilots, of what this might mean for the industry going forward. It's very, very interesting. And quite honestly, we're not quite sure how this is going to play out, but I think this is something very useful for us to have going forward to think about. So thank you very much for your attention.